Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. Okay, today, this is a chart of the S&P 500. This is Tuesday, the 5th of May. We closed at a new high. Okay, this seems to be like a deja vu market. Okay, it's the same forces that are playing out throughout the days, weeks, and literally past month. Okay, you have a straight move up with no rebound in sight. Okay, so deja vu market. I thought today we'd go over briefly exactly what the deja vu market is and go over some of the trades that I'm looking at, especially one trade that I did today, which is mitigating a trade that is a loser. Okay, I thought that'd be good for you guys to see how we mitigate losing trades, okay, which are still open, by the way. So let's get to it. Let's talk about the deja vu market. First, we always talk about the technical picture. Guys, bullish. We finished at highs, okay? But this is what has me worried, okay? I'm still looking at this rising wedge, let's say, or like rising channel, if you will, okay? Slowly drifting upwards on muted volume, okay? It wasn't the volume of the down move here. It's very, very low volume, okay? If it actually breaks the bottom, we could it'll break the uptrend. Doesn't mean it's going to go all the way down, but this is a very dangerous type of pattern. It could still go up. I mean, we're not at extremes yet, but so far, technically speaking, we are bullish. But we should note that we are, drifting slowly higher. Any break of this channel could result in a sharper move down to hopefully the past highs of 700 around. Okay, on the SPY. So that's what I'm looking for. Technically speaking, it's bullish. Sentiment, greed. Now we're starting to get to the 67% level. Everything is pushing into greed. Put call options, people starting to buy more. Market volatility is still not at a greed yet. So almost everything is at greed or extreme greed. We're getting close to a move, a counter move. Okay, we might not be there yet because we never even tasted extreme greed. We might have to go there for like a couple of days before the move goes down, because this looks very, very strong. Doesn't seem to be abating yet, but because people are starting to buy a lot of call options, like we see, this is going to greed. Maybe we need extreme greed in the call option buying and in the momentum and in the breadth. The breadth is even at greed. Okay, so the fear before was like not enough breadth, but now it's coming back. So sentiment is getting there for a reversal. Okay, I still think we might reverse fairly soon. Okay, it would be healthy if we did in terms of the bullish nature, but we'll see. This can go much higher. We can go maybe to, who knows, the 735, which is a 5% move from the highs. 5% move without any tracement before coming back. It's very, very possible, okay? So far, the market is staying strong, okay? So deja vu market, we know it's about the war. There was some kind of attack in the UAE yesterday, but, Iran denies it. So it's all these back and forth plays on the war, okay? Basically trying to get the Strait of Hormuz open. So we look at the U.S. oil, okay? U.S. oil is sort of hovering at these highs. Again, we said about $100 a barrel is pretty much the average, okay? Let's draw the magic line at 100, okay? Okay, this is like an average price, let's say up and down, up and down. It's hovering around there. If the Strait of Hormuz opens, it's going much, much lower, okay? So that's it. I don't think it's going to go much higher unless, extreme closure of the Strait of Hormuz happens, which I don't see it happening. So even with a threat of both parties, Iran and the U.S. closing the Strait of Hormuz, it's trading at $100 a barrel. Okay, so this is what I think. There are mitigating factors. Okay, this is what you guys have to know, is that don't just look at the headlines. Okay, the oil is not going to go to 200. Okay, we're seeing like almost worst case scenario and it's at 100. There are mitigating factors, forces happening. Okay, somebody's ramping up production. Production is getting into the market somehow. These prices are too high for producers to ignore. In the States, they're going to ramp up shale production. Something is going to happen. Okay, we don't know what, but something's going to happen to meet this production, because oil is very, very easily ramped up in the world. Okay, so again, oil is at the same levels. And again, I reiterate my on gold, it's not going up with the market. It's actually going, it's not going down with the market. It's not contrarian. Okay, usually gold rips in the war, but now no, it's going with the market. But I sense weakness in gold for the next months at least, the summertime at least, maybe August. Okay, we hover around 42 to 5,000 forever, for months. So I don't expect anything to happen in this space. Okay, maybe we need to wash out more people with apathy and not a flush down. Who knows? But that's it. That's my reiteration of the deja vu trade. It's gold, and oil, and SPY ripping to new highs. Okay, so let's go over what we mentioned yesterday and go over a trade that has gone wrong for me. Okay, yesterday we talked about the service as a SaaS companies, service as software as a service. I'm getting tongue tied, tongue twisted. Okay, we mentioned that there was negative divergence, the prices going down where the stochastics are going up on ServiceNow. We saw it on CRM, Salesforce, same thing. You see the price going down. Okay, so I am looking at these companies to enter. Okay, ServiceNow specifically, what I'm looking to do here is to short the 85.80. Okay, near the money, 92, but 85.80 put spread. I want to short it. I want to get at least a third of the width. If it's a $5 spread, 85, so a third. Okay, so $1.60. That would be a good price to pay for the $8.50 to $85, $85 short. Let me write it so you guys can see. Okay, I want to short a put at the 85 and then buy it back, buy another put at the 80. So you're risking $5 and you're going to make a third. So 1.667, whatever that is. So that's what I'm looking to. I haven't pulled the trigger yet. Okay. So, and for the one that I was looking at as being strong, Shopify had earnings and boom, it's getting tanked. Okay, so that's it. We don't play the earnings. We wait till after the earnings. So I'm going to wait till this sort of solidifies, sort of hovers a bit, because you don't just catch a falling knife. You have to wait before entering a short put position, which is what I want to do, depending on where the VIX is. If the volatility is low, we're going to do some kind of spread. Okay, but as of right now, we're just watching Shopify. I like it. I'm just not in it yet because after one smack, it's usually followed by two or three. Okay, you need to watch it stabilize a bit. Okay, so that's it for the SaaS companies that I'm looking to do. It's ServiceNow and is what I'm looking at, and Shop. Okay, and the trade that has gone bad, and it's the bane of my existence at the moment, is Intel. Okay, Intel was an earnings play. I generally don't do it, but because the calls were so expensive that I decided to do a pre-earnings trade. I should have waited till after earnings to do it, but it doesn't matter. On earnings date, that on Thursday, April the 23rd or 24th, right before earnings, around this level, I shorted a call, the 88 call. Okay, I shorted a call in 88, and I shorted a put at 55. Okay, so as it ripped higher, okay, this put was pretty much useless. Okay, it fell down, so it was profitable. So what we did is we rolled it up. We waited a day, but we rolled it up to the 70 level. What do I mean by rolled it up? I bought it back and I sold another put at 70. Okay, so I picked up some credit. So we did the first strangle here. It's called a strangle. Short call, short put for credit. We got rid of this guy. Okay, so let's get rid of him. Get rid of this guy. And we rolled him up. Okay, later on it went higher here, so we decided to roll this guy up even more to the 83 as the price was going higher. See, this is a loss. We're seeing a loss on this trade, so we had decided to roll it up even higher to 83. So let's get rid of this and roll it up to 83. So we still had a very, very tight strangle going on. Let's get rid of this guy. Mouse is not cooperating. Okay, so we have a very tight strangle. Okay, and today they announced news. I think they might do a deal with Apple, wants to buy Intel chips. Okay, so this is up even more after market. We're losing money. So what I decided to do today is go inverted. Okay, I took the put here, and I'm just gonna go to the 90. I shorted the put here. Okay, it's at 90. Okay, so it's inverted. Yeah, I'm basically settling for a $2 loss here, okay, because 88 and 90. Okay, I know it looks like 93, but I didn't want to put it over each other. So it's a $2. I'm locking in a $2 loss. Okay, but as I was rolling, as I was doing all that stuff, I pretty much collected about $8.40 of credit. Okay, so the loss, if I take $2 loss, if it somehow goes back down within these levels, I'm going to get out of it. And what I'm hoping to do is get out of it for a scratch. Okay, so I picked up $8.40 something cents of credit, and I'm looking maybe to do $8.40 or $9 of debit when I get out of this. Okay, because whatever it is, plus the $2 loss, you'll see it's not there yet. I mean, we're still ripping higher, but if it ever goes down on some kind of pullback, I'm looking to get out at a scratch or a smaller loss. Okay, because right now the loss is 88 plus 8 cents. Is I'm getting it at, it's like I'm short at 96. Okay, so it's at 110 right now after market. It closed at 108. So I'm down like $12. Okay, but look, I would have been down way more. A stock basically in, what is it, not even 2 weeks, almost 2 weeks, it went from 65 to 110. So like 40, like what is that, like a 75% move in 2 weeks. Normally, if I would have just shorted the stock, I would have gotten destroyed. But right now, because I'm trying to mitigate a loss, it's just a $12 loss at this point. Could get worse. You don't know. Okay, there's going to be a point where I have to punch out. Okay, but I haven't reached that yet because this position, by the way, expires end of May. Okay, May 29th. So I'll have to mitigate it then too. I don't know. I'll have to see what happens. Okay. So far, I'm down just $12 on the trade, where it could have been down even more. Okay. So far, the mitigating, I'm trying to go for a scratch or a small loss. If I take a $1 or $2 loss on this trade, it'll be beautiful. Okay. So we'll see. I've never seen something go up literally. I mean, forget earnings. I mean, even before earnings in end of March. So basically 1 month, 42 to 110. Almost triple. Almost a triple move in a month. Never seen that before on a big stock. Okay. So anyways, like we have a very, very bad situation here. And we're still mitigating it. We're still within reason in terms of our loss. Okay. And another thing, when you do these trades, these strangles, these undefined risk trades, you have to go small. Okay. I went pretty small. The point is to go very small and do it often. These are supposed to be like booking trades back and forth. Okay. So sometimes you will get this outlier move, but over time you should win more than you lose. Okay. But so far, I just want to show you guys how to mitigate this. I went inverted. Okay. I don't know if I like this. If it ever goes back down, I'm getting out. I'm not going to get it cuter. Okay. I just know that right now I'm trying to get out for some type of scratch or small loss. Okay. So that's it, guys. Deja vu market. It's all about oil. It's all about oil and war and AI. War and AI. Okay. The AI stocks are still doing well. Semiconductors are still doing well. We saw the technical picture is still good. However, if it ever breaches on the downside this channel, we could get a protracted move. Hopefully we go down, because I really want to buy more, but I'm not going to chase this move higher, slowly drifting up. It's very, very dangerous. I'm just going to ride with what I have. Even though the VIX is still good, it's still above 15. It's getting there. Anything lower, very, very dangerous. I'm going to add nothing, try to close some longs that I have if it ever goes below 15. Okay, that's what I plan to do. Deja vu market. I'm looking at, what am I looking to do now? ServiceNow. I'm looking to do the 85.80 put spread to sell it. I want to sell this and buy this. Okay. I know it's not saying much, but it looks like two negatives, but this is a plus. Okay. I want to buy a put, sell a put here. Shopify, we're just waiting until this down move gets, I see something that it's sort of stopping, okay, because now the premiums are elevated. I really want to get in after another crash. Maybe it drops down to the 90s. Maybe I'll start doing that and sell the 80 kind of put. I'll go naked, okay, but so far nothing. And Intel has been a thorn on my side. Went inverted. Collected, I'm locking in a $2 loss, but I have so far in all of the rolls, all of the mitigating factors that we did, all the mitigating steps have given us $8.44, something like that. I have to look, let's say $8.40 of credit. which mitigates the loss a little bit. Okay, it doesn't sting as much. Okay, hopefully it goes back down. I don't know, this can continue to go higher. Up until a point I will have to punch out and take the loss if it continues to go higher. If not, and drifts lower or whatever, eats premium, I'm looking to get a scratch at best, or a small loss, maybe knock the loss down to $2-3. Then I'm out. Okay, so that's it, guys. Let's see what happens this entire week. We could continue to drift higher until everything here gets to extreme greed. Okay, which could happen in 1 or 2 days. You never know. Okay, so that's it, guys. Talk to you later.